blockbuster deal announced today involving our parent company, Disney.
Breaking news this morning, Disney and 21st Century Fox making it official.
That breaking news, the blockbuster Disney deal, the parent company of ABC buying many of the assets of 21st Century Fox.
The deal is remarkable because it represents the end of Rupert Murdoch's.
Why would Disney want this particular deal to go through?
At $71 billion, Disney's acquisition of 21st Century Fox is one of the largest in mass media and entertainment history, turning Disney into a mega media empire overnight. But there's more to Disney's historic purchase of 21st Century Fox's vast film and television assets than meets the eye. While many people initially saw Disney's acquisition of Fox as part of the consolidation trend happening across the media world, the results of this horizontal acquisition are only now being shown. From a surprise move not many expected to a bidding war and transforming the streaming game, Disney's massive merger likely ended up saving the iconic company's bacon. How? Let's find out. Welcome to Economic View, where we explore the ever-shifting impact and effects of economics around the world. By the mid-2010s, 21st Century Fox was a powerful force in media. Like Emperor Palpatine reigning over his vast empire, Rupert Murdoch's multi-international mass media and entertainment conglomerate had risen ruthlessly to produce everything from films and TV series to news, documentaries and sports. Following the 2013 spin-off that separated News Corp's media and publishing operations, 21st Century Fox emerged as a big-time movie and television player. But over time, Fox began to struggle. They didn't have the resources to build their own streaming services and couldn't keep up with the competition in Hollywood. Although Fox owned some of the most popular movie and TV franchises in history, the resources owned by competitors Warner Brothers and Universal were much bigger. They were getting left behind like Matt Damon in The Martian. Fearing slowly dying in an ultra-competitive industry, remember what happened to MGM? Fox needed cash to shore up their declining revenues. The answer? Selling off the most prized film and TV assets of 21st Century Fox. But who had enough to offer to take over Fox Corp's digital treasure? Well, of course, the Walt Disney Company. In 2017, Disney was no stranger to big-time acquisitions and mergers. Who can forget their 2006 buyout of Toy Story creators Pixar, revolutionizing animated film? Or the 2009 acquisition of Marvel Studios, transferring the MCU over to the executives at Mickey Mouse HQ? And let's not ignore when Star Wars went over to the Disney side after Lucasfilm entered the Disney orbit in 2012. By mid-2017, Disney had spent over $45 billion on acquisition since 1957, but that was nothing compared to what lay ahead. A titanic $71.3 billion merger that would change the face of the media industry forever. So when Disney announced plans to purchase much of 21st Century Fox's media assets, many people took note. Not because of the eye-watering initial $52 billion offer that was mentioned, but because of what it meant for the media industry and Disney itself. In late 2017, Wall Street was buzzing for streaming companies, and Disney saw Fox's vast libraries as the perfect opportunity to get a jump on the competition. With iconic films like Avatar, Independence Day, and Titanic in the Fox Studios arsenal, the rights to franchises like Star Wars, X-Men, and the Alien films, and a legendary television library including The Simpsons, Family Guy, and American Dad, Fox's content archive was a budding streaming service's dream come true. And as other studios and media giant rivals eyed a chunk of the streaming market, Disney was prepared to pay big for the rights to this content goldmine. Soon, other players came to the party. Comcast dropped a $65 billion offer for 21st Century Fox, spicing things up and tossing a spanner into the works for Disney. Even Sony was reportedly considering taking a shot. Ultimately, Disney came out tops, upping their offer to an eye-watering $71.3 billion, 10% more than Comcast's offering, and receiving the green light from Murdoch himself. It was an offer Fox couldn't refuse. But shareholders still needed to okay the deal, with many of them coming on board after Disney proposed an option of receiving cash instead of stock from the acquisition. Regulators also got involved, forcing Disney to agree to auction off some of Fox's regional sports networks for around $10 billion. Plus, the nature of the horizontal acquisition, where both Disney and Fox offered products in the same stage and format as each other, meant Disney had to carefully navigate the details. Shareholders and authorities approved, and it was all systems go. But the revised offer wasn't as simple as it seemed, and some investors were getting nervous. You see, debt had a big role to play in negotiations. When Disney made their initial $52 billion move for Fox, many people saw it as the deal of a lifetime. However, they also needed to assume $14 billion of 21st Century Fox's debt, eventually offset by Comcast paying $15 billion for Fox's piece of Sky, and the company had to raise over $26 billion to make up for the cash portion of the deal to Murdoch and his shareholders. Still, following the pricey bidding war that left Disney with an extra $20 billion tab to pick up while covering the cash offer and debt issues, Disney estimates the deal final value at around $57 billion, close to the original offer. But why was Disney willing to go so high, and what led the executives at the company to push so hard to acquire Fox? Well, here's what Disney got for their $71.3 billion. Hundreds of movie titles, including multi-billion-dollar franchises like Avatar, Star Wars, and X-Men, plus access to dozens of classics. The rights to iconic characters, including those in the Marvel Cinematic Universe, along with all their villains. A massive collection of timeless TV series, including The Simpsons, Grey's Anatomy, and How I Met Your Mother. A long list of successful Fox TV channels. Stakes in Star India, a 73% slice of National Geographic, and a 30% holding in Hulu, making Disney a 60% majority shareholder. And also high-value properties including Fox Studios and countless other real estate assets. Ultimately, many of the 21st Century Fox's assets, including 20th Century Studios and Fox Animation, were incorporated into Disney's existing structures, while others, like Fox Searchlight Pictures, were renamed or restructured and continued running under the Disney banner. Plus, in the 6 months between Disney's initial offer and their final $71 billion bid, direct-to-consumer media and streaming services had taken off. Naturally, Disney wasn't only looking at the movie scene when they made their move for 21st Century Fox. It was their streaming ambitions that motivated the decision, which ultimately has worked out in their favor. While Disney could have used the $71 billion to plug the holes in their leaky box office movie performances, the boatload of Fox TV shows and movies alongside cable network channels and the Hulu controlling stake only added to Disney's bottom line. Things were shaping up nicely. Disney Plus took some time to get on its feet, but with the addition of so much quality content from the Fox acquisition, the streaming service has settled into third place behind former partners Netflix and Amazon Prime, boasting over 150 million subscribers, not to mention their 60% Hulu share. That 60% share has since grown to 100% control, with Comcast ceding the last of its holding to Disney in early 2024. Now, along with Disney's addition of ESPN Plus to their Hulu, Disney Plus and Star Plus offerings, the Disney streaming machine is quickly becoming unstoppable. But it is the movies and television portions of the acquisition that really got things rolling for Disney. Avatar 2 alone netted $2.3 billion at the box office. That staggering amount represents 3% of what Disney paid for 21st Century Fox's assets. Throw in future Avatar merchandising, re-release, and rights revenue, and you'll begin to see how much of a win it was for Disney to get hold of this piece of the pie. And with at least another 3 of James Cameron's Pandora-based epics in the pipeline, Disney is set to recoup a tidy amount over the next few years. And then there's X-Men. The X-Men franchise is seen as a priceless media jewel. With Disney now controlling the rights to Professor Xavier's team of mutants, finally integrating X-Men into the Marvel Universe is sure to be a record-setting cinematic event. Deadpool's surging popularity means even more cash for the Disney accountants to tally. And between recent box office sensation Deadpool and Wolverine and planned future installments featuring Wade Wilson's alter ego, Disney may yet add even more X-Men to the mix. How those movies perform may be our best indication yet of how the acquisition saved Disney's bottom line, and perhaps even turned the tide for Marvel's fortunes too. And let's not forget what the entry of the Fantastic Four into the MCU could mean. A stunning coming together of the most successful superhero franchises in history. Even Disney's theme parks stand to benefit. With Disney now controlling the rights to titles like The Simpsons and X-Men, which currently feature at Universal Studios parks, many cannot wait to see their favourite Springfield and soon-to-be MCU X-Men rides in action at Disney parks. Is Disney's investment starting to bear not just fruit, but an entire media orchard? Let's not forget that things have changed a lot since 2017. The global pandemic, cost of living challenges, a huge shift in how people consume digital content, plus a series of Disney box office bombs, means that the media mega company almost found itself going the way of the Titanic. After the deal's conclusion, and a global pandemic nobody saw coming, things took time to settle in. Disney Plus wasn't booming just yet, the culture wars kept some people away, and integrating personnel into the Disney mix proved difficult. With Disney taking on in-development Fox film projects, the disruption also led to some teething problems too. Following dismal performances by two of the last films released under the 20th Century Fox banner, the X-Men prequel Dark Phoenix and Terminator's Dark Fate, which have both been branded among the biggest box office bombs in history, Disney decided to overhaul Fox films in development, slashing their slate to 10 movies per year and ordering half of them to be made exclusively for Hulu and Disney+. As it turns out, the Fox acquisition, like the Avengers themselves, may have just ended up saving the day for Disney. With the world shifting to streaming services and many movies struggling at the box office, it turns out that Disney's big $71 billion gamble is paying off. While still not out of the woods, the Walt Disney Company can look at their merger with 21st Century Fox with smiles as wide as those on the faces of kids at Disney World, for now at least. And with more and more media consolidation into fewer and fewer mega companies, perhaps Disney did get the jump they needed on everyone else. Did Fox ultimately save Disney? Only time will tell. Be sure to like it and subscribe to the channel. And if you're interested in building an investment strategy to outperform the stock market, sign up to our newsletter where you'll get access to an exclusive course. Thanks for watching, and we will see you in the next one.